Greg, thank you for joining us.
Dan, great to see you.
So, Greg, I assume we are on stage now. I believe we are. So, Greg, let me start with this question for you. FinTech has become, to me at least, a little bit like what internet was. Maybe 20 years ago, it started with this thing with a small group of people, and now it seems to kind of be almost all-encompassing. At Silicon Valley Bank, how do you guys define what FinTech is and what it isn't?
Yeah, so it's a great question. And to your point, it has become so prolific. Everybody's talking about it with the IPOs of Coinbase and Robinhood and Toast in Boston. So congratulations to the Boston market. But yeah, it's top of mind for everyone. Think about FinTech very broadly. It's basically it's digital consumer banking. So it's neobanks, it's insurtech, it is wealth management, it's payments. It's a massive market, and it really does cover such a broad swath of the technology landscape. So I could see how people would want to know how large it is, but it's a massive market getting a lot of venture capital attention, as we all know.
And so you mentioned Toast, which is an interesting one, right? Toast has some point of sales stuff and revenue stuff, but it's also kind of a restaurant operating system that in many ways, has kind of little pieces of OpenTable almost in it, which you wouldn't normally think of as a FinTech.
Yeah, it's one of those many payment facilitators. So they started out in one way as an operating system, but what they realized is if they're in the main system and they can facilitate all the payments, that's a great business. And then it's like, well, why stop at restaurants? Let's go broadly after everyone like Square and others. And obviously, based on their IPO valuation, you can tell that the market is very receptive to what they've accomplished.
Is there you said the market is very receptive. Is there anything right now in FinTech that the market doesn't seem very receptive to? And by market, I guess I mean public and private markets.
Yeah. Boy, it's a great question, Dan. And we haven't seen it. I mean, clearly if the product doesn't work, if they don't generate revenue, that's an issue. But right now, so many of the FinTech players are doing well. They're growing quickly. Venture capital is pouring into the market. When you look at the growth rate of, let's say, IPOs, this year, we're on track to probably do 15x the valuations of IPOs in FinTech compared to last year. Venture capital will probably be up 3x. So yeah, I think as long as the market holds and FinTech does well, money is going to continue to pour in and valuations will remain high.
Is FinTech, from your perspective, there's, I guess, maybe a little chicken and egg here. Is FinTech driving kind of the overall IPO market boom, or is the overall IPO market boom just bringing FinTech along for the ride?
I think it's somewhere in the middle. And the reason I say that is that you can, again, look at some of the names that I mentioned. You can look at Coinbase and Robinhood, and then, of course, Toast. And their business models and the growth rates and kind of all the other aspects of it and the markets they're going after are so massive that the public market, the public shareholders are looking at that and saying that's a place we want to be. So that's driving part of it. But it's not just FinTech. You can look at an enterprise software is doing well right now in the public markets. Pretty much everything innovation is doing well. So I would say it's somewhere in between. FinTech is right in the mix and helping clearly to facilitate it as well.
SVB, you guys announced recently that you were expanding your tech investment banking ranks in terms of actual people. Is that a reflection that you believe deal making, whether that be venture capital, whether that be M&A or IPOs, is going to simply just continue going up and to the right for the foreseeable future?
Well, it wasn't done for that reason. We may benefit from that, but that's not why we did it. And that goes back to, Dan, what our business model actually is. And to take a step back, what we're all about is taking care of the innovation economy from startups all the way until they become very large public companies. And we do that in our commercial bank, in our private bank, in our investment group, which is SVB Capital. And the last piece we've gotten into over the last 3 years is investment banking. And so it started by our acquisition of Leerink Partners, actually, coincidentally, in Boston as well, headquartered in Boston. And we've added to it. And we weren't just expanding our technology investment bank. We actually are starting and building our technology investment bank. So by the end of the year, we'll have 50 people in our technology investment bank. We believe one of the best investment banks in the market. And it's really, again, to serve our clients in the innovation economy, take care of everything they need. And if we benefit by the market remaining hot and IPOs happening and M&A being strong, we will certainly take that.
Is this a reflection? There's so much that gets talked about. We'll get back to fintech specifically, but there's so much that gets talked about kind of in the tech economy, and particularly kind of the venture capital part of the tech economy, about how there aren't kind of as many boutique investment banks that are focused on tech like there were, in the late 90s, the H&Qs of the world, and how everything became bulge bracket. And that became very complicated kind of for, call them smaller tech companies. Is that a niche you're trying to fill, or are you trying, you guys are now a $36 billion market cap company, or are you trying to become part of that kind of that Wall Street bulge bracket group?
So because that's all we do is work in the innovation economy, you can say, we want to be like, and that would be great to be like the four horsemen were back in the day. But I think it's because we're exclusively focused in this area, and in this area right now, it's the hottest place to be. And I certainly believe it's going to be the hottest place to be for the foreseeable future, right? Innovation, technology, broadly speaking, fintech included, healthcare, and life sciences. If you think about those three segments around the world over the coming years, I'd be hard pressed to see what other market would be a better market to be in. And so we believe having a boutique investment bank where that's what they exclusively focus on is needed in the market. And we're excited to be building that out.
So much of fintech is about automation, whether via AI or machine learning or whatever, but automating pieces of financial services. Why are you hiring real people?
Why do you what?
Why are you hiring real people? Can't you automate a lot of this?
So we, it's our philosophy is that you have to have both. When you're lending money, when you're building relationships, when you're giving advice, there isn't just an AI machine that can give that perfect advice, because advice is nuanced. Clearly, technology, AI, machine learning.
Can I stop you for a second, Greg? But some of the companies you're banking, they're arguing that, right? I mean, that's the whole robo-advisor theory, right? No, advice can be automated. Lending decisions can be automated. They can be
more automated, but having an individual, having a person there to be able to help those clients. One thing is when it's really small and the needs are not complex, but as complexity gets introduced, people want to make sure they're taken care of. Let's talk about wealth management. Sure. So robo advisors. So when you have $50,000 or $25,000 or $10,000, getting advice on how to invest that money using portfolio theory and saying exactly how it should be invested, or using a Robinhood with those amounts of money, that makes sense. But when you start talking about true wealth management, millions of dollars, life savings, and what they're thinking about from a retirement perspective, having a combination of technology and people to be able to give that advice, the nuanced advice, because not everyone's the same. I believe it has to be both. And so technology allows those individuals to be smarter, to be much, much better. But it's really the combination of the two that we believe is the power that we're excited to be delivering.
Let me ask this. There's actually a question in the Q&A, and for the audience, please put questions in the Q&A, and we'll do kind of a bunch of them at the end. But there's one that seems relevant right now, I think, on this, which is within SVB. What do you think you're doing right now on the banking side, which is innovative, not just funding innovation, but is actually innovative in the space you're in?
So I think you look across all the different businesses that we have, right? Each one of those has, different areas that I think are innovative. So in the commercial banking side, the way we lend money across the spectrum, right? Being able to lend money at early stage and late stage, I believe that whole package of solutions is innovative. And we continue to do that, whether it's warehouse lending, and the list goes on and on. It's a long list, especially in the lending side. In our fintech area, we just announced a new partnership with Plaid. We're the first one to use Plaid, kind of that ACH validation to make it easier for companies to leverage our ACH platform to make it easier for them to kind of be that payment facilitator. So it's really across the board in the commercial bank. In the investment bank, I would say where we're innovating, it's taking all the knowledge that we have at the early stage and mid stage and leveraging that for public markets, so that when companies go public, they have not just the insights of what's happening at the late stage and in the public markets, but they understand what's happening at the private markets as well. And the last piece I would say is in our private bank. So you think about the private bank at SVB and what we take care of. We take care of entrepreneurs. We take care of the founders of these companies, venture capitalists, et cetera. And what do they have more than anything else? They have concentrated private stock positions. And so our private bank is all geared toward understanding private stock and how to take care of that, either from a tax perspective, from a lending perspective, and supporting it, because that's all we do, right? That's the main part. So there's a lot of different ways we think about innovation across the platform, and that's what we think about every day. How can we get better at doing that?
I am going to come back at some point to the tax implications on private stock and how anyone can currently understand the implications of those. But let's pull out a crystal ball a little bit here. You know, we've talked about how there's just massive amounts, for example, of venture capital coming in. Within FinTech, are you expecting to see significant consolidation? And let me just start with that. Are you expecting to see significant consolidation? And if so, kind of what's a timeline on that?
Yeah, my own crystal ball. I haven't sat and talked to our team about this, but I do believe consolidation will occur. When you and part of it is because you have large banks who then have to think about how do they play with these fintech players. So they may look at doing those acquisitions. Valuations are getting high, but they still need to think about that. And it's actually to come up with the broadest platform possible. People want not to go across 50 different solutions. They want to have one or two. And so to bulk up from a capability perspective, some of these fintechs, I believe, are going to have to merge together, are going to have to acquire each other to basically provide that broader product set that makes it easier for clients to go to one place. So I do believe it will happen. Your second question is when. I think it's just going to, continue. I don't think it's going to be one catalyst. I don't think it's going to be if the stock market slows down or something happens that all of a sudden you're going to see consolidation. I think you're going to start to see it over the coming, quarters and years. And I think it'll be a steady stream of M&A that's going to occur.
And you expect more of that than organic creation of alt products. Like, I mean, you think some of the companies you've talked about today already, Coinbase, Robinhood, et cetera, Coinbase has done a little bit of acquiring, but for the most part, it seems when new products and kind of new categories they enter, they're doing it in-house.
Yeah, but I think it's speed to market. So think about Square's acquisition of Afterpay, right? So they could have done that themselves. I mean, you look at Afterpay, and there's several players in that market, or buy now, pay later, and I believe the analysis they did was, well, we could look at doing it organically, but the 12 months that it would take to do that, or 18 months, is going to really put us on our heels. So why not go after what they believe was the right play in the market? And I think that analysis is going to happen across the board. And so I do believe it's going to happen on a more regular basis.
I'm going to get back to consolidation in a second, but you brought up buy now, pay later, which I feel like is something in my newsletter I'm writing every single day, because there's another startup that gets funded somewhere in the world, and it's global now. Isn't this just installment loans? Isn't this an old idea with a new name?
So there's clearly, it has that aspect to it. And I would just say, from my standpoint, given the number of players in the market, as you said, there's new players coming in every day. They have to come up with something new, something innovative. It can't be just the same. And so, what I love about our clients is that just when you think that they're just doing Me Too stuff, they add some new feature, some new capability that you sit back and go, gosh, that is really innovative in its value add, and it's needed in the market. And so I wouldn't bet against innovation clearly happening in that space on a more regular basis, but there's a lot of players in it, and clearly not everyone's going to be successful. So I think we're going to see some definitely attrition in some of those companies, just given how many are being invested in.
I'll just ask one more buy now, pay later question. should there be, one of the reasons I think it's not being called installment loans is because there's some negative connotations to it, right? Which is namely that people sometimes buy things or start to buy things they can't ultimately afford. So they end up without the item and some money out of their pocket. And it's one thing for that to be in a physical store. E-commerce or something on your phone can be much more impulse buying. Do you think anyone's paying enough attention, or maybe I'm overstating the potential downside risks, not of the companies per se, but to kind of consumers and the economy of the growth of all these companies?
Yeah, I mean, one of the stats that I saw was if you look at going to an e-commerce site and the purchase rate without a buy now pay later kind of capability, it went from 4% to 6%. And that, a 50% increase is massive. So you would certainly believe that every e-commerce site would want to have that solution, that capability on their site as something that's important to them. So as long as you have that demand happening or those results happening, you're going to see a lot of demand for this buy now, pay later. And I think the stigma, and I think it was a stigma of this installment loans, I think is going away. And because we look at the stats, mostly it's younger adults that are using this as a solution, and they don't have that legacy installment loan history that we do. And so I don't think they think about it at all.
Okay. So, are you saying they're dumb and ignorant in this case, and they don't realize what's about to come around the corner? Really.
No. I'm saying in some cases, not having a historical perspective is actually a good thing. And I think in this case, I think it's going to be, it's going to turn out better than it did in the past from the standpoint how people viewed it. And what I'm watching is you look at the default rates and the payment rates. And again, with information being so visible, if you don't make that payment, right? If you don't make that installment of those 4 payments or whatever it is, guess what? It's going to absolutely ding your credit, and you won't get another installment loan or a buy now pay later loan anytime in the future. So I think the credit performance is actually going to be much better than what it would have been in installment loans historically.
I think, isn't that why we have now a whole group of credit improvement startups also, which are supposed to take care of this problem? I don't know. I should point out I am drinking Dunkin' coffee because this is a Boston FinTech week. Greg, let's go back to consolidation a little bit. And one of kind of in your crystal ball, and I'm curious where you see regulation, specifically antitrust regulation in this, and if you believe. You mentioned Plaid earlier. Obviously, they had troubles when Visa wanted to buy them. That deal ultimately goes away because it gets blocked, and then Plaid realized they were underpriced. Do you believe that regulators could be a significant roadblock to lots of consolidation?
So I think obviously in the news, the regulators are spending a lot of time looking at large technology. That's the biggest topic. My biggest concern, and we're certainly voicing this, is like many laws and rules and regulations, overcorrecting, letting the pendulum swing too far is a massive risk. And so everyone should be aware of one of the laws that's being discussed is where every acquisition, almost at every size, has to prove that it is not anti-competitive. So very different than current antitrust, where it's, they look at large acquisitions and then they determine whether it's anti-competitive or not. What that would do to putting sand in the gears of innovation, M&A, I think would be pretty devastating. So I think they're hearing that message. I think they're getting it, that would not be it would really be, just horrible for the U.S. economy. So I don't think that's going to happen, but we need to be vigilant in making sure they really, really understand that. So now going back to your point, if you put that aside and say they figure that out, do I believe there's going to be more regulation? The answer is yes. I don't believe we're going to get around that. Do I believe it's going to be harder for large tech companies to do acquisitions, or some of the larger financial institutions or FinTech players to make large acquisitions? I think it is going to be harder. I think it's going to be a higher bar to make sure that it is not anti-competitive, and we should just be all ready for that.
Is it something that's already coming up a lot in conversations with clients?
Not so with clients yet. With venture capitalists, we're talking about it. I'm the chair of an organization called TechNet, and so we spend a lot of time talking about this. The NVCA, National Venture Capital Association, is spending a lot of time on this, educating lawmakers to the downside of regulation that's going to be, just create a challenge for what is such a blessing in the United States, which is the innovation economy, and we don't want to slow it. We don't want to slow it down. And so it's more about talking to legislators than anything else.
That's interesting. It's interesting you say that. Why not clients? Because so you're right. I do get the sense, and tell me I'm wrong about this, that for the most part, tech companies right now are kind of looking at DC and saying, show us. In other words, we're going to keep doing deals, even ones that are going to, we almost know we're going to get reviewed. And until you really come and not just block one or two one-offs, until you really come at a bunch of them, we're just going to keep going. Or am I wrong about that?
Yeah, I think innovation companies, they have their head down, they're building their business, and DC to an extent is an afterthought. And it's been that way for a long period of time. And I would caution companies from taking that view. And I would encourage companies to get involved in, there's a lot of different organizations. TechNet is one of them, to help make sure that their voice is being heard in DC. And many legislatures truly do not understand what our clients do. They don't understand what FinTech companies do. And we have a responsibility to educate them. So when they're making laws, they understand the ramifications of that. And so I just would encourage companies to get involved and not ignore DC. As I've said in the past, ignore DC at your peril.
Speaking of DC, within the fintech world, one kind of the hottest DC topic lately has been crypto. What do you think is the most important thing or issue that right now, whether it be Gary Gensler or Congress, is trying to get its head around when it comes to crypto?
They want to make sure that it's a level playing field, and that consumers or investors are getting the facts, and that it's transparent. And again, I'll go back to what I said a minute ago. Just all tech companies and fintech companies, as they engage the SEC, as they engage legislatures, you have to treat it like a partnership. You can't treat it like an adversary, because they hold the cards in in many cases. And so I just would say that, we have to partner with them more than anything else. And I believe in general, the legislators want to do the right thing. The SEC, I clearly believe they want to do the right thing, but they certainly don't want to be snubbed and ignored when they're engaging in a conversation. So I think it's important for our industry to work more closely with them to come up with the right solutions and the right regulations going forward.
What you were just saying, it's almost like you were talking to me, but you were really talking to Brian Armstrong over Coinbase. So that it's interesting you say that. Can I ask, kind of from your perspective, this broader kind of crypto question, which is a lot of folks within the industry, and obviously it's a decentralized technology, so I've talked so much about how one of the real benefits perhaps or promises of it is that for example, authoritarian government in theory can shut it down, despite what we're seeing in China. This can kind of live outside of government. Yet at the same time, there is an extraordinary amount of interest in making sure the government regulation here is right and that ETFs are allowed and all that. Like, which is it exactly from your perspective? Is this something that's supposed to live outside of government, or is this something that needs to be enabled by government?
I think it's, I don't know if it needs to be enabled by government, but it certainly needs to be, there needs to be some governance around it from a government perspective. Or let me rephrase that. The government will require that there is some governance around it, some vantage point that they have from, I wouldn't say control, but I just would say governance around it. And you think about it, the dollars that you're talking about in global currencies, I mean, you're looking at global economies that depend on understanding how their currencies are exchanged, and economies are built and, shrink and grow. And if they lose control of that, that is a very fearful place to be. And so it's one of the main reasons why they're being more engaged and more involved. And if you look at testimony in Congress, if you look at SEC comments, this is coming up more and more, and I don't see it slowing down.
Let me circle this back around and combine them, which is, do you expect to see significant, in the long term, significant consolidation within the crypto sector?
Yeah, I think you're going to see consolidation in the crypto sector. I just think it's, broadly speaking, across FinTech. You're going to see it. Economies of scale, being able to go after clients, and again, having a full platform, a full capability to go after them, I think is true, as I've said earlier. So I think crypto is the same. Crypto is the same thing.
Quick question, because I might as well ask you since we're talking crypto, and then I'll move on. Do you believe overall in the intrinsic value of NFTs, or do you believe they're snake oil, digital snake oil?
So here's what I'd say. I've been at the bank for 28 years. And every time that I have made a statement that said, I'm betting against something happening, I have been wrong. And so I will not bet against NFTs having value, being useful. And even if the first NFTs and the models around NFTs are challenged, and even if they don't work, my belief is that they'll pivot, they'll adapt, they'll change, and they will become something important. You can see the growth of some of the NFT companies, and they're massive. But do I believe there's going to be missteps along the way, and there'll be some companies that have failures? Of course, but that's the way all innovation happens, and we shouldn't be surprised by it. Do
you own any NFTs personally?
I don't own any NFTs, but I do own some crypto currency. So I have a few of those coins.
Fair enough. One of the things SVB is doing, which I think is interesting, is you're starting to slowly, but starting to actually incubate some of your own companies, and particularly some of your own FinTech companies. Talk to me a little bit about that, because that seems to be a new thing for Silicon Valley Bank.
Yeah, we strategically thought about this, or started thinking about this about 4 years ago. And when you look at our client base, roughly 40,000 innovation companies around the world, and you think about what their needs are, if we could come up with solutions that we could present or introduce to our clients that satisfy a lot of their needs, then we should look at being part of it. Meaning build those companies. In a lot of cases, we've had this discussion where should it be done inside 100%, where we own 100% of it, or should we do it in a way that is a separate company? In some cases, we're doing it inside. In other cases, we're building it outside. So our first kind of foray into that was a couple of years ago. We started, along with Rivet Capital, a company called Vouch Insurance. So it's a digital insurance company starting out with startups, providing D&O and E&O and property and casualty. And they've had really nice growth over the last few years. And so that's one example. But we're looking at things in the crypto space. We're looking at things in the payment space and in other industries. So it's not going to be a massive part of our business, but we're definitely looking at it. And I think, like all businesses, you have to put a lot of different bets out there. You have to play a lot of different, you have to make a lot of different investments to see kind of what's going to make the most sense.
You said there's these other things you're looking at. You're looking at crypto, et cetera. Are there other SVB incubated companies that we just don't know about yet?
The other one that we launched with a group called High Alpha out of Indianapolis is a company called Bolster. It's not a FinTech players, but it is a talent management company. It started out as a fractional talent management company, and now they're doing recruiting for boards and really almost advisory for CEOs and executive teams. And Matt Blumberg is the CEO, and feel really good about it. It's early stage, but will there be more? Yeah, the answer is there will be more companies that will start.
A big picture question, so it's interesting. You talk about the stuff you're doing inside of SVB and kind of some of the tech innovation you're using to do kind of these some traditional lending, wealth management, et cetera, or advice. Overall, are banks, and SVB has been around for a while, are banks and the FinTech sector at odds with one another? Are they partners? What exactly is that relationship, particularly when we see this new group of so-called neobanks, which seem to be coming, if not at you, definitely at the banking sector?
Yeah, and the answer is it's both. We partner with, we bank 600 venture-backed FinTech companies in the United States. You can add another 100 to it on a global basis, and it's startups. So pre-venture backed, you can probably add another 200 or 300, maybe even more. So you're looking at about 1,000 FinTech clients at SVB. And so there we bank them, we'll lend money to them, we partner with them, and some of them are competing with us. And, do I enjoy that? The answer is no. But I do believe, like competition in general, it allows you or forces you to raise your game. And I think I put FinTech in that category.
So you bank your rivals. Why?
Because we have a responsibility as the bank for the innovation economy to work with all innovation companies. And I know that sounds counterintuitive when you think about banking competitors, but that's our broad mission as an institution, and we take that seriously, and we talk about it every day, and we believe in it, and so I don't see that changing. And again, my view is that we have to believe that we can compete and that we're going to raise our game regardless of what happens in the market. And so, we view that we're going to be able to partner with some of those FinTechs that make us better and stronger and more relevant to our clients. And so that's just our view.
When you talk about competition, I will take a question from the audience here from Kyle Long, who asked, he said, with a unique business model and customer base like SVB has, who do you see as your biggest competitor right now?
We don't have one competitor. In part of it is because you look across our different business units. So our investment bank has a whole series of investment bank competitors. They're just investment banks or mostly investment banks, but they don't do commercial banking. You can look at our private bank, and there's a whole series of competitors. You can look at our commercial bank, and literally at every stage, there are different competitors at startups. There are different competitors at middle stage or late stage once they become public companies. And so there really isn't one player. We did a competitive analysis a couple of weeks ago, and when you look at all the different competition that we have, right, there are literally hundreds and hundreds and hundreds of competitors out there, but there's no one that at the end of the day has this kind of four pillars that we have exclusively focused on the innovation economy. And that's certainly what we believe is our main competitive advantage, where we can be the place where people go and kind of take care of everything they need.
That was a very good political answer, but let me try again a little bit more. Okay, there I believe 30 Major League Baseball teams. The Red Sox, in theory, compete against all of them, and no matter where they are in the standings, it's true they compete against 29 other teams, but they don't really. They compete against the Yankees, and that's who they want to beat. Who is the one that is closest to you? I guess you could say.
I'm not gonna answer it, Dan. So it is. I can go in every vertical. And in every vertical, we have one or two or three main competitors, and it literally changes on an annual basis. And so what we talk about every day is that we have to play our game. We have to be able to differentiate ourselves. And I think about competition, but I think more about how we're building out our capabilities to take care of our clients. So I know it's unfulfilling as an answer, but I'm going to stick with that.
How much, you talked earlier about consolidation within the FinTech space. How much acquisition activity or how much acquisition activity are you looking at? You talked about Leerink earlier, which you bought. How big a part of your business do you see that inorganic growth?
Yeah, if you go back 3 years ago, we didn't do any acquisitions historically, and all our growth has been organic. But as we again decided we wanted to be more of a full solution for our clients, we acquired Leerink Partners. So that was the first foray. And then after that, we acquired a group called West River Group, which is a debt platform. And so what that means is in a SVB Capital, we have a bunch of debt funds. So if we can't do a certain size loan or a certain risk loan on our balance sheet, we will partner with our investment group, SVB Capital, and use debt funds that we manage to be able to do larger loans, more complex loans. So West River gave us that capability. And the final part is this summer we closed Boston Private's acquisition again, and tie back to Boston again on July 1, and to build out our private banking capability. And so in the future, do I believe that acquisitions will be part of what we do? The answer is yes, but it will never be the main event, because our organic growth has been incredibly strong.
Do you see some of that? I mean, is kind of within fintech space, do you see yourselves possibly acqui-hiring teams to really kind of build certain tech products, if in-house, kind of acqui-hires essentially? Not so much groups that are financial services groups, but engineering groups. Yeah,
I do. We talked about it a week ago at a strategy session, and making sure that our product team has their eyes out for, as we think about building out certain capabilities. You can look at hiring people one by one, or you can look at what are those companies out there that maybe are just getting started, that have the requisite talent that we could look at picking up and bringing on board. So I won't say for sure that's the path we're going down, but it's certainly one of the options we're considering.
Great. I'm going to go to the audience Q&A in 1 second, but I have to ask one thing first, because it is curious or interesting. I guess you've talked a lot about how you guys bank the innovation economy, whether that be fintech or other sectors. You're also, I believe, now the largest winery banker, or the main winery banker in America. That is not an innovation economy. That is one of the oldest industries that exists, crushing grapes to get people drunk. Why?
So this goes back a long time. So the bank's been around for coming up on 40 years. And we were not exclusively focused on the innovation economy, and we had a lot of different businesses. And so over time, we just kept kind of doubling down or tripling down on innovation. The last piece was premium wineries in Napa and Sonoma. And I remember with our prior CEO, my predecessor, we had a conversation about it and what should we do with the wine group. And first of all, it's a great business. We've had it for years and it's done well. But secondly, when you think about relationship building, connecting with clients, the wines, high-end wines and wineries and winemakers, it's a great place to be. So it's a great business and it's great marketing for our platform. And so we've kept it. It's a great business and it's part of our private bank right now.
Is this also just because, like, when you have another client and something goes well, they'll send you some swag, like a T-shirt or like a mug or something, but from the wineries, you get wine? I mean, is that what this really is?
Pretty much.
So let's go to Q&A. If you have a question, we have 5 minutes left. So if you have a question, please get it in the system and I will read it. A question here. I'm going to hit a little button that says approve. Oh, and then, it disappeared when I said that. Did it appear? No. Let's see. Sorry. I shouldn't have pressed that button. Let me try a different question. I will go back to this. Here it is. So in terms of private stock transactions, you talked about that a bit kind of on your wealth management side. The question from Brody is, how does what you're doing compare with some of the newer technologies that are enabling real-time or chain private stock transactions, kind of the figures of the world? Basically, can you guys deal with digitally native cap tables?
So what we announced, and I should have mentioned this earlier, basically when we thought about this private stock and be able to trade it, there's a bunch of platforms out there that we looked at. And we came to the conclusion that the best platform out there was NASDAQ private market and be able to scale that up. So with Adina, the CEO of NASDAQ, and Goldman Sachs and Morgan Stanley and Citi, we came together to spin NASDAQ private market out of NASDAQ into a separate company. And our whole purpose of doing that is to be able to make that as real time as possible. And so our strategy around that is to build that out. We believed it made sense to be part of a consortium to make that happen. It's a capability that we can now present to our clients as a capability and work with our private bank. But over time, do I believe it will get to what Brody's asking, which is truly real-time trading on a private stock basis? The answer is, yeah, I believe it will get there. When's a question? I don't have an answer to that, but I believe we will get there.
Question from Jeffrey. Wondering if you could touch on how you believe central bank digital currencies are going to impact the banking sector, particularly in the U.S.
Yeah, it's so early. It's hard to say. I know I sit on the San Francisco Fed board, and it's talked about, but it's such at a high level. And so part of what the Fed has done is created a centralized payment person. So there's a new chief payment officer at the Fed, and Mark's responsibility, among other things, is to think about this and work with legislators to figure out what the game plan is around that. And so it's too early to say exactly what it's going to be. So I can't put my crystal ball out there to say what it'll look like.
I mean, do you believe that taking the time frame out of it, that the idea of a digital dollar is just kind of fait accompli, like it will come, we just don't know when?
I think it has to come at some point.
Why? Why does it have to come?
Because I think the way the systems are set up, with paper currency, my view is over time. And again, you said don't worry about a time frame.
Let's rephrase, in our lifetimes, assuming something, I know the pandemic maybe changed those, but like in our lifetimes.
Yeah, I believe in our lifetimes that digital currencies central digital currency will come into play. I just think it makes so much sense. The inefficiencies that exist with paper currency is massive, and digital currency it just makes a lot of sense.
Final question, because we have 2 minutes left, and I am told we get completely shut off once that clock goes, so I don't want to screw that up. And this is a general question, so I'm going to ask you to blow up one of your colleagues' email inbox. It's a question from Blake, and take this where you will. It just says, who should a fintech firm reach out to partner with Silicon Valley Bank?
Great question. So the person that runs our national fintech practice, and actually happens to be, this all comes back to Boston, is Dan Elrod. In Boston. So Dan Elrod is in Boston. You can Elrod at svb.com. So Dan, sorry, you're going to get a lot of emails, but thanks for that question. And Dan, always a pleasure to spend time with you.
Greg Becker, Silicon Valley Bank, thank you very much. My name is Dan Primack at Axios. You can get my newsletter at getparada.axios.com. There's another session right after us. Thank you, everybody.